We've seen grain futures back off in the last couple of weeks from the season highs. And I think the three reasons. Number one, we're starting to get some rain across parts of central Brazil, which has taken some of the risk weather premium out of the marketplace. We're also seeing some concern about U.S. and China relations. China has not bought U.S. soybeans for over a month. And those have believed that we'll see a tightening of U.S. balance sheets, especially in soybeans, have been kind of a little disappointed that they haven't come in and bought. We are the only game in town. There is no beans available out of South America. And so we're just kind of wondering if their crush margins have dropped, if their meat demand has dropped, or if they just may take a little bit less beans than we thought earlier. We were looking for them to take 38 million tons of U.S. beans. They've got 34 on the books. And the big question is whether or not they take additional corn. So I don't necessarily think that this is going to continue. I think 1150 is important support in the beans, just like the 420, 410 areas in corn. Wheat market has taken most of its premium out with talk about higher Russian crops. Supplies, India exports, bigger Canada supplies, and bigger Australian supplies. So again, we've taken most of the weather premium out of the wheat market. On Thursday, the USDA is not expected to make major changes to U.S. or global supply and demand. They could maybe raise bean exports 20, 25 million bushels, corn 50 million bushels. But most people are looking for a corn carryout as low as 15, 20, and a bean carryout as low as 65. So it may take until January until the USDA actually says a number like that. I think end users should take advantage of this break and add to their coverage, whether it's meal, soybean oil, corn, or wheat for wheat flour. I don't expect there's much more downside risk, and people are talking about the possibility of nearby corn trading over 450. Wheat would follow that price action, and that maybe we could even test 475. And talk about finally trading over $12 beans and 40-cent oil because of the tightening supply. So yes, I think this is a good time for end users to extend coverage. The next question is, should farmers sell grain for 2021 crops after January 1st? Again, we always take an approach, a scale up selling maybe 10% every 20, 30 cents in beans, every 10 cents in corn, maybe every 10, 15 cents in wheat. Your objective is probably at some point in the first quarter, something over $13 beans, 475 corn, and then maybe something closer to $6 wheat. And then I would think you would want to maybe buy some calls, and just in case we have a weather problem in 2021.
The rule of thumb is that anytime any market can advance to new record highs, it is quite often the case that the fundamentals are strong enough to sustain additional gains. So I think that's the case right now in stock index futures with the new record highs that we did see this morning. So higher prices are likely with what we are seeing, not just from a technical point of view, but also from a fundamental point of view. So look for additional gains in stock indices. So recently we had the dollar index falling to its lowest level since May of 2018. Since then there has been a bit of a recovery, but longer term I still believe that the dollar index will continue to trend lower. In fact, the next support comes in at the 90 even level, and I would not be surprised to see that point taken out. Of course, that would be to the downside. So look for additional weakness longer term in the dollar index. We do have the European Central Bank meeting this Thursday, and there's some talk that the ECB may add more stimulus. However, there is a growing feeling that the Central Bank of the Eurozone may be running out of policy options that could be supportive to the euro currency longer term, and I think that is exactly the case. So look for additional strength in the euro currency longer term.